What's up, YouTube fam? Welcome back to the channel. As you can see, another day that has not been so bright in my accounts, but it really hasn't affected my mood. Yes, maybe I'm a little more sluggish to look at my Robinhood, maybe a little less motivated to post a video, but that's not what this channel is about. This is about transparency, honesty, showing the ups, showing the downs. So I want to get into what I think would be the most effective way to sell options based on the mistakes I've made, so you guys can learn and you guys can see what I'm talking about. So with that being said, right, based on where the account's gone, you know, honestly, I definitely was trading a strategy that I guess you can say was the epitome of, eating like a bird and pooping like an elephant, right? Why? Because I was trying to collect higher premiums on these risky stocks, but the problem is collecting 200 here, 300 there, obviously it's not going to be useful if you're in stocks that can actually dump the way these two have dumped, right? So I'm not upset about it. I think I just needed to learn for myself, regardless of everything I've been through in my life of the markets. This was my beginning of selling options, and maybe a side of me did truly believe I'd be able to collect enough premium to grow faster than, something like this can happen. Ultimately, it happened. I'd rather it happen earlier than later. Now, in terms of how I'm managing these positions right now, I'm still just doing nothing since they both expire this week. But let me get into why I think this wasn't the best strategy and what you guys can learn from it. So let's just look at this RGTI position, right? I know a lot of people that sell options are selling options on super risky stocks. So I want to show you why where the downside could be, and ultimately why something like TQQQ will be better. So notice how even when you go 25 days out, you still can't even roll lower without it being a debit. Now, to me, that's a huge issue because, a big part of the option selling strategy involves rolling. So obviously, when it dumps like this, you can't even really get a better price or get closer to the money without losing everything anyway, which basically makes the position, in a lot of ways unsavable. Obviously, I'd like to recover something, but it's just been straight down. I mean, RGTI has been probably the most bearish stock in the entire market. So lesson learned. But when we look at Con-L, it's very similar. If you were looking at my videos last week, I had a chance to roll Con-L when the market retraced. But again, even when you go over a month out, you still can't really get much lower. I can get, to 48 right now, 47, which Con-L is different. I don't mind holding this, which is why I think I will roll this position, because Con-L and Coinbase are stocks that I don't mind being a part of. Where RGTI, it's just completely, there's just no hope for it at this point in time. Now, with that all being said, when we come to something like TQQQ, which I understand this is not going to be for everyone, right, because it's a leveraged index of the Qs, but ultimately, I do still think this is a much better option than 90% of the things people are selling options on. Notice how even if you were at the 78, right, so even if you were deep in the money right now, if you went a month out, you'd be able to roll all the way down to here. Now, how do I know that? I know that because the whole point of rolling is that the new option has to be more expensive than your current option. So even if we had a strike price of 80.5 and we're at $6, right, we wanted to roll 32 days out, we can get all the way down to 76, right? Because again, you just need the new option to be more expensive than the old. So in a lot of ways, the TQQQ, just based on its volatility and based on its movement, you still have plenty of opportunities to roll throughout all of this price action. And obviously, it's very similar to the NASDAQ, right? As you can see, very similar to, the QQQ is basically the same thing, just 3x. And it's been around since 2010. So it's like, this isn't something that has been struggling, right? It's not really something that I would deem so risky, in the sense of its inception date was February 2010. When you pull up the chart, it really has been, extremely bullish. Obviously, it has been extremely volatile, right? Considering that it went from in November 21, 92 all the way down to 17. But when you look at it and really zoom out, it's not a chart that really scares me. Like, even if you did ride it all the way down, you would have opportunities to roll and actually be able to roll. Like, yes, a crash like this is devastating, 77%. But, you're listening to a guy who had already witnessed some of his positions fall, 90% in a week or whatever it is, right? What are we down in the week? Well, the option is up 900%, but the stock itself is down 62% this week, right? If we go to Connell, you know, let's see, 23%. So 44% in the month, which we've been involved for basically all of it, all of the losses. So, you know, getting comfortable with volatility, getting comfortable with risk is something that I understand not everyone will be able to do. And ultimately, it comes down to being able to take calculated risks. To me, TQQQ is a calculated risk, obviously compared to what I'm doing right now and at this moment, which is why I can say confidently, I like the strategy. I like the fact that there is, in my opinion, always going to be opportunities to roll. I don't see it getting rug pulled, right? Like obviously something like RGTI is legitimately getting rug pulled. You know, it could actually go to zero at this point, and you know, I'm down so much. It's almost like what would be the difference, right? But you know, I don't really know necessarily how to even handle this position in the regards of, you know, again, the opportunity cost versus the sunk cost. You know, I'm already down whatever it's going to be, 3,300 at the moment. I think the most I could lose was 5 or 6. Obviously, that's not what I want to do. I don't want to lose the full amount. I don't see it actually going to zero, but you know, $2 is actually reasonable at this point. Connell, you know, at least we still have an opportunity to roll, and at least it's still moving with the crypto markets. Obviously, Bitcoin on the weekly time frame, you know, it looks like it could be setting up for a real disaster. I'm not even trying to, you know, I'm really not even trying to predict it. Like, I definitely think that if we pull up the CME chart, right, there's this gap that I do think it could honestly be targeting. It could definitely be targeting to fill this and retrace and ultimately test all of this. You know, to me, that's what looks like going to happen. It looks like it's going to happen. Connell, again, I'm not so concerned just because it's just a leveraged crypto play. RGTI, on the other hand, you know, to me is much more concerning. Even if the dollar amount is a lot lower, is more about the fact that, you know, there's no rolling opportunity. There's probably no bouncing opportunity. Where, again, TQQQ, to me, you know, if you're someone who wants to be playing leverage bets, you're better off doing the entire NASDAQ. I mean, obviously, stocks can truly dump based on something a CEO says, right? Based on anything that the company does, right? I can pull up charts where, you know, you could actually have gone through, like, let's look at MSTR, for instance, right? Let's just say you fell into the hype in 2001. You actually could have rode it from 320 back to $1, under $1. Now, obviously, it's recovered. But if I had to guess, anyone who's watching this channel does not want to have to hold for 20 years, right? And there's plenty of stocks you can find where it's like this, right? We go to Ford Motor Co. You know, where is this? This is from 2022. You know, the levels from 2018. I believe if you go back even further, you know, it's gone through 20-year periods. And there's plenty of stocks, big companies that you could believe in that, you know, have been not even touching levels from 20 years ago. And people are break even after 20 years. So in my opinion, you know, if you want to get something that's risky, going to give you high premiums, going to give you decent returns, you know, you can actually run the wheel on, you know, it would have to be QQQ at this point, you know, like, let's see, if we were to sell a put, you know, 170, obviously with my account size, I could be doing 2x that. Listen, 1,200 a month, it's not necessarily going to be the 4,000 that we collected the first, you know, month we did this challenge, but, you know, one, it's something you can 100% go to sleep at night knowing you're going to get returns. Two, you can definitely run the wheel because it is volatile and it does hold up with the market. And three, you know, I've always been a believer of house money. So, you know, someone who wants to take, you know, maybe little trades to make more money, whether it's buying an option, you know, a couple weeks out, right? Let's just say you're extremely bullish or extremely bearish, whether it's whatever kind of trade you might want to do. Ultimately, I've always been a believer of doing it with house money. So hypothetically, if I was collecting 1,200 a month every month with TQQ, even though it might not be, you know, 4,000, you know, I could probably take 200 to 300 of that and use it for some sort of risky play to try to grow the account faster to offset, you know, the gains we're missing out not doing riskier stocks. To me, that still sounds like a safer bet than putting up this much risk in stocks that can obviously decline 50% in a single week. So I hope you learned a lot. I hope this strategy makes sense and rings a bell. Let me know what you guys think in the comments, what you think about RGTI, what you think about this strategy, selling options this way. And I'll definitely get back to you guys tomorrow for the next video.